How to know if a move up is going to fail or if it's going to break the high? How do you know if it's going to be breakout or not? This is something that has plagued traders since the beginning of time. It plagued me for a really long time. I figured out 3 different ways to identify if it is going to break the high or not. And that's what in this video I'm going to share with you my 3 ways of identifying if it's going to break the high, if it's going to break out, or if it's going to fail. Fibonacci's. So this right here is one of my favorite ways to tell, and it's the reason I went short into here. So you have your Fibonacci tool, which is on TradingView, it's going to be right here when you pull up Fibonacci or Alt-4 on your keyboard. You just put that at the high, put that at the low. So put it at the high that you're looking to see if it's going to break out of, and then the last low that was made in the previous swing. So it would have looked like this before that. And this is really when you want to be measuring when price starts pulling back up. So you just grab high to low from there. And then you're simply just going to look and see, does it reject at the 80% or 0.80? So this here rejected right at the 80% level. It did go over it just by a hair there, but that's okay. That's pretty normal. It rejected there. Beautiful rejection. As soon as it pushed down here and this candle closed, I went ahead and entered short, and then I've been short since then. So you can use this on any high or low. It is very powerful, and they make great setups because the risk is very low. So as soon as it pulls up there and pushes away from the 80% level, which is that right there, which is going to be 0.8 on your Fibonacci settings, as soon as it pushes away from it, then your stop just goes just above that high. Very low risk. And the reward would be to see this low broken here. Obviously scale out if that's what you do. So this does work on many different asset classes, from meme coins to Bitcoin. You know, I trade it on all different assets. So let's go ahead and check this out right here. So boom, we have a 50% retrace or an 80% retracement. I'm so used to saying 50. So we have an 80% retracement right here, high to low, and back up. So I can go ahead and short this here. Once it pushes away from it though, you don't want to just short, you need a high. I don't know where to put my stop right now. I would not know where to put my stop. We need that. Right here, we measure this from this high to this low that was set right there. Here, let me drop down so you guys can see what I'm talking about. So this low right here to this high right here was an 80% retracement. I gotta scale out here. Someone just dropped it on its face and then it popped right back up. And take off half right here. And all right, so it's about to push away from it. So I want to go ahead and get ready to enter into this. We have a perfect touch there. All right, now I have somewhere to put my stop loss, right? It's very imperative you guys do this. You cannot just blindly enter into these trades. Just because it goes to a level does not mean it's going to act as a resistance. You must see it push away from there. The more aggressive to push away, the better. NASDAQ, for example, very fast push away. We go 30 seconds, you can see what I'm talking about. So pulled up here, bam, hit it, pulled away. So now, is this low likely to break? Well, let's check it out. Hasn't quite got there yet. So once it gets down here, I'll know, but I'm going to teach you the second way right now. So here we are on gold. We're going to use advanced market structure here. Not the type that's top IICT, but actual advanced market structure. So we see here that this high led to a lower low. Boom. So that makes this a strong high here. This high did not lead to a new lower low. Never took out that low. So you should expect this high. It's probably going to break above this high. But this high up here, I am not expecting it to break that high because it led to a new lower low. You can use this to understand direction, and it also helps identify lows and highs that you should not expect to be broken. So if it is a strong high or low, you should always expect at least one test of the high before it breaks. At least one. Sometimes two, but at least at the very bare minimum, one. If the high led to a new low, that makes it a strong high. If the low led to a new high, that makes it a strong low. Very powerful stuff. It's how you can identify which highs and lows you should be looking to get in on to expect a breakout. If it is a strong high or low, do not expect a breakout on the first test of it. It will reject from it. And then if it comes back again, and maybe even the third time, it will break it, but definitely not first. And the time frame depends too. Lower time frame ones are obviously going to break. Um, you know, maybe easier, but they'll still get a test and push away. It's just a different time frame, so the reaction will be differently. All right, so here is our strong high. It led to a new lower low. Took out this low here, lower low, making it a strong high. We have our 80% retracement. See how we can add these together for confluence, and it makes it even stronger. Boom. And then last but not least is going to be, is there a reason for price to come back up to that high? What do I mean by that? Well, sometimes price has a reason for moving in that said direction, especially in the futures market. So we can see here as price is moving up, we could see it had a reason to move up here. That would be right here. So this is a balance area. So right here you have a balance area. So price needed to redeliver here. If we look on gold, I'll show you what I'm talking about a little bit more. So right here you have a huge move down. This entire move is going to need to be redelivered. Don't look at the fair value gaps, guys. That doesn't matter. Okay. Yes, they're there. Yes, you can trade them, but I'm telling you, if you just delete that shit from your mind, you'll trade so much better. Right here, you have actual structure. So price consolidated, drop down. So when price comes back up here, I know that it's going to go to there. Here, it's going to target right there. So I can pull up and expect this high probably not to be broken on the first pass, maybe the second, but definitely not on the first. It'll probably reject right in this area here, right near the 80% level. That's what I mean by a reason to go up there. You can use fair value gaps if you want, but I think if you just look at big candles and candles in a row, it's a much more powerful way to do it. So now, does this have a reason to go down? Well, we have a big up move right here, strong trend that hasn't been returned to. So price, I know price needs to come down to here. So should I expect this low to be broken if it has a reason to move down? No, I should not. Of course, it could break it, but I should not expect it to right away. Again, here's another asset class, just showing you guys that works on pretty much everything. So here we have a move up. We have 80% retracement to the tick there, and then price should move up from here. And look at that, beautiful. Just perfect there, perfect retracement right to it. 80% retracement, popping back up now. I'm in profit now. And then when this goes to pretty much a new high here, 260-ish, I will have doubled up. I would then turn my $100 into $200. Pretty cool, right? This app is obviously a lot more powerful. So I entered in here with $60. They gave me $42,000 to trade with. Insane. And then there's our 80% retracement. This high to low, 80% to the tick, and rejected. And we saw it on NASDAQ as well. There we go. Look at that. Look at this, guys. Money. I just showed you a way to trade 3 different asset classes, guys. 3. A super powerful, profitable way to trade 3 different asset classes, guys, for free. What I'm gonna need you guys to do is I'm gonna need you to go ahead and subscribe if you like my content. If you don't like it and you're not, this is the only video you're gonna watch, please don't subscribe. And if you're a subscriber that doesn't watch my content that often, please unsubscribe. So I'm the only dude in the world that's probably gonna tell you to please unsubscribe. But what happens is if you guys don't watch my videos, which I don't make as many as I used to, but still, if I make a video and you don't watch it, all it does is send to YouTube that my videos suck and that they're trash, which sucks. So then it won't recommend it to as many people, and then I can't help as many people as I want. So there we go. Still cooking here. 500 or 200% gain on it so far. So that $56 I entered with is now going to be $176. Boom. I'm gonna go ahead and exit here though. That's how it's done, guys. You fucking do it right there. That's how you do it right there. I do trade live on my Discord every night. So if you want to join me and learn from me, I do trade live and teach in a live market environment every single damn day. So if you would like to be a part of that, you're welcome to join me. I'll put the link to my Discord in the description. You can join for free. You don't even have to pay to join. And if you want to get funded like I am with funding companies such as Take Profit Trader, Bullnox, and some other trusted companies, you're going to want to check out my website, which is going to be verifiedfundingcompanies.com. Best discounts in the game with the companies that you can actually trust. That's the important part. A lot of these guys out here be pushing prop firms on people without even considering if it's a good company or not, which I think is a disgusting, vile thing to do to people. I think you guys should hold them responsible if they do that to you. I think they should be held responsible if the company does not hold up like they said it would. And that's why I decided to guarantee the companies that I have on my website. So that's the benefit of using my link or my code. At least you have a benefit for it. These other guys just want you to use it just because, I don't know. Why should you use their link? What do they provide for you? That's the question, right? And again, my company's website is verifiedfundingcompanies.com. All right, so I will see you guys in the chart. Peace out.